Okay, so hello everyone, my name's Luke Jones. I run a company called Fortifex. We're building basically a product that helps people manage their cryptocurrency investments and removes emotion from trading. So today we're going to talk about how to utilize and reward your ecosystem using blockchain technology. The way that I really view cryptocurrency in general, and well, that's pretty much the main use of blockchain at this point, is as a way for a business or an organization to better engage like their local ecosystem. So the way that I view cryptocurrency is from an investment perspective as a function of revenue, as opposed to something like stock that is a function of equity. So by participating, for example, in an ICO, what you're actually doing is participating in an organization's future revenue. So a company will obviously issue a service, you'll give them the token, they'll then take that token back and then obviously sell it to the market or use it for cash or whatever, and then the cycle goes round and round. So a little bit about me. Basically, I've been trading for the past 11 years. I was a futures trader, and then I got involved in cryptocurrency about 2.5 years ago, and then I've been working in this space full-time ever since. Pretty much, I'm a bit of a crypto contrarian, and also a bit of a crypto cynicist. So if you ever want to speak to someone who doesn't always talk about good news, then that would be me. I personally believe that 90% of cryptocurrency projects will fail, and that the current 100 as it exists now will be entirely different in 12 months' time. So that's will be about 95% different. So projects that existed were in the top 100 this time last year are no longer in the top 100 and probably at the bottom of the rung somewhere. So today what we're going to talk about is thinking about what organizations can do to engage their ecosystem, so sort of things that people do right and wrong in the cryptocurrency, or in the ICO space, to sort of, do a project that's either going to be successful or do a project that's going to, better promote itself, better promote their ecosystem, and then obviously reward its participants. And then we're going to have a look at some examples of guys that aren't doing it incredibly right. So first of all, before we have a look at that, we have to look at what makes up a blockchain ecosystem, in my view anyway, I could be wrong. First of all, it's enablers. So these are people who basically enable the network to run. So these are guys like miners. They can be guys who are doing some kind of service on behalf of the blockchain that are being rewarded with tokens. Then we have users. So these are the people that basically are benefiting from the service that the organization is providing. Then we can have a look at investors. They're the early stage guys who actually enable the project to be built. And the foundations. This is generally the tokens that are held by the company to either promote future liquidity or whatever kind of outcome they're looking to provide. If a token or an ICO investment does not, if you can't understand what is the benefit to all four of these people by why this token needs to exist and how it's going to benefit these four groups, it's probably a dodgy token. One of the main reasons why projects fail, we could get into token economics, and we'll just touch on it briefly because I have a lot of time, is that you've got to understand that companies that don't understand, haven't really thought about token economics, as in how in 5 years' time, once that $20 million ICO, that $20 million they've raised, how they're actually going to sustain a future business. If there is no indication of how that's going to happen, the project will fail. And that is actually a norm across this whole industry. And this is why 95% of projects will probably fail. Because the main reason that the company has done an ICO is to raise funds because it's really, really easy. See what I mean about being cynical? So the first project I want to talk about, by the way, these projects that I'm using examples I'm not associated with in the slightest. And I'm only invested in one of them, which is this one, called QuantStamp. So QuantStamp is basically an organization that helps review smart contracts. So what they do is they put a quantitative stamp on a smart contract. And the way that they've sort of rewarded the ecosystem, the way that they sort of engage both their investors, their users, and obviously all the different people that enable the network, is through something called proof of caring. So this is something that's quite altruistic. It's for the betterment of the cryptocurrency space. So what happens is when people create articles that talk about either their product, which obviously they like, but it's also things when they talk about how to safely store your private keys, how to appropriately manage cryptocurrency, how to avoid scams, anything that they deem as being caring about the cryptocurrency space, you actually get rewarded in tokens that they receive from auditing other people's smart contracts. So it's almost like you're getting paid dividends for participating in their network the way that they want you to participate, which is by caring about the entire cryptocurrency ecosystem. So that's actually a really cool way that they've done that. And then you can see utility in the token. So you can see that the token value will go up over time. because the more that you hold, then you'll receive more dividends by participating, by writing articles, by encouraging people to act safely in the industry, and things like that. So they've increased knowledge of their project through positive sharing and aligned influences. So guys with YouTube videos will do that kind of thing, like talk about how to be safe, how to not be stupid in the crypto space, and they're rewarded for that. So this is actually a really, really good project, but it also benefits their own business as well as their whole ecosystem. Another one that you've probably heard of, which is quite big, I'm actually not invested in these guys, is called Steemit. So Steemit is basically sort of imagine something like Reddit, but you can earn tokens by submitting content that is then rated higher or lower by people, or you can pay tokens by being able to thumbs up or thumbs down articles. The really, really cool thing that these guys have been able to do is when we talk about banking the unbanked, and there's been a lot of people talking about how cryptocurrency can change the world and this kind of stuff. This is one of those very few projects that has actually had the ability to do that. So, one of the main points that they've gone on about with these guys is that they've actually been able to enable kids in Africa to produce content online, then put it on Steemit, and then they've been rewarded with Steemit tokens that they can cash in for their local currency. So people have actually been able to, in third world countries, have been able to tell their life story, which is obviously quite interesting for people who haven't been able to experience that kind of life. And then they've been able to earn Steemit tokens, which they've been able to cash in for US dollars or whatever, and actually give themselves a better life. So this is an actual project that has enabled people to do better things. So it sort of gives, and sort of is a global thing as well. So it means that you have people from all over the world, and it also means that you reduce things like trolling, because what you're doing is you're actually, as a user who's going to be rating someone's story or contributing to someone's story, you're actually paying real money to do it. So you're not just going to be downvoting people or upvoting people just at a whim. You're actually putting some stake in the game when you're giving it to them, and then the tokens that you're giving to them are shared between the content creator and obviously the business itself. And so this is one of the really, really good use cases as well for blockchain. So it means that no matter what content you put up there, and this is a big case at the moment. So if you've had a look at things that have been going on with things like YouTube censoring certain channels because they don't agree with the content provided, with something like Steemit, because all the articles and all the content is actually stored on the blockchain, and because a blockchain is an immutable ledger of data, it means that nobody can actually shut down your content depending on whether or not they like what you're saying. And this is like a really, really important thing when you think about the whole ethos behind like the libertarianism of blockchain. Like this is actually really, really important. And it means that so you put an article up there, it's actually up there forever, and no one can touch it unless you want to take it back down again because as long as it meets certain terms of use. But once it's up there and it's been approved to be up there, no one can take it down if they don't agree with you. So to talk about projects that don't do this right, so this is more going to be something that you guys need to think about if you're going to invest in a blockchain project or if you're going to invest in an ICO or something. Have a look at the way that the token interacts with its community. So the example I'm going to use is, I'm not going to tell you who the company is because I'm not that mean a person, but essentially it was a trading platform, and the way that their token utility worked, there was no utility. So what it was basically if you own 5,000 tokens of our token, you get a 40% discount on our service. And like, how many people would really think that is of value to anybody? So when you have a look at that, where is the increase in token price going to happen for the investor? Like, why is it just basically they put on more users and people want to get a discount? How are they really using that token to engage their community? How is the community being rewarded for existing on that ecosystem? And other than just increasing users, I mean, where's the real growth coming from? Where's the benefit? Where's the utility? Like, it's not really in exchange for a service or anything like that. And so guys that do really, really lazy token metrics like this are generally projects that will not really work in the next few years' time, because there's no real exchange of value for the token. So it means that in 5 years' time, when the ICOs run out of their $20 million of funding, where's the revenue source thing going to come from this project? And how are the token holders going to benefit from that revenue? So if you have not got like an intra-company ecosystem where you can see a flow of value that's being facilitated by the token, then chances are the ICO is dodgy. And so these are the 4 things that you need to consider when you're looking at a project. I've sort of already touched on them all at the moment. Number 1 is that how are the enablers being encouraged to participate? So how are the miners in a proof of work safe system, how are the miners being encouraged to participate in proof of stake, how they're being encouraged to sort of validate blocks and things like that. How are people who are contributing to a network with something like Steemit, how are they being rewarded for participating in that network? How are the users going to use this project? Is the token coin usable and does it have value? Like, why will people go out to the market to buy this token to then use it on this platform? How will the underlying investors, how will the initial investors benefit from the increase in tokens price? Is there a possibility that this token will increase in value? And then how will the underlying value of the company, how will they use their tokens to increase their value over time? Anyway, thank you guys. Be safe and look after each other. If you want to get me, that's my number, or you can check me out at luke@fortifex.com. If you're feeling a bit curious, you can check us out at fortifex.com to have a look at my platform. Thank you so much.